Hey fellow trader, Cecil Robles here with yourforexmentor.com with another daily video analysis for you today. I want to talk to you about a couple of currency pairs, a couple of trade ideas here that I am looking at. One is on the Euro-US dollar. We're looking at the daily chart right now. That means every one of these bars here, every one of these candles is worth one whole day. So we're just about at the close of Monday here, September 28th. This bar is about to roll over right now. And really what we're looking at here is a continuation pattern on the Euro-US dollar daily chart, prices dropped down. We were on the right side of this down move here. Prices dropped down, had a bounce off of these lower levels like we thought we were going to have right here at this area. And price started moving back up. I said we're going to look for some pullback. So price is going to come back up here. It's going to pull back at some point. It did. It's going to go back and retest these lows again. It did that. And as you can see here, it's come back up and it's created a hammer here to the upside. And you can see that the candle now has pushed through this trend line that I created on the chart. It's closed above that. And this is a classic continuation pattern to go to the upside. Now, what kind of upside are we talking about here? What kind of a potential? Well, at least back up into these highs somewhere around the 114 area, 114.15, 114.17, at least back up into that area. Now, am I looking to play this on the daily chart? Probably not right now. I mean, you can see that we're moving into this kind of real sideways type market. So what I like to do is go down to the shorter time frame. If I was looking to play it on the daily chart, just to give you an idea, if I use this little tool right here, where price currently is right now, let's say I wanted to just buy right here at this point. If I was looking to play it at the daily chart, I'd need to have my stops down here below these lows. My profit target needs to be up here, somewhere around this 114 area, like I said. And you can see there that I have about a 1.18 to 1 reward to risk ratio if price stalls out at that level. Once again, you know, kind of bouncing within this range, just testing these areas here. So the best bet for me is to drop down to a lower time frame chart. So we have the 4-hour chart. We had a a massive candle here on the 4-hour chart. So you can see it was like an engulfing candle here, a bullish engulfing candle. It engulfed all of these candles right here. 1, 2, 3, 4, 5, 6 candles right here. It also broke through and closed above this trend line. So if I'm looking to go long, I could go long actually right here at this point if I wanted to and ride prices back up to this 114 area with a much smaller stop loss now. In this particular instance, I'm looking at a much smaller stop loss. Prices right here, I'd set my lows below this low here, this engulfing candle low here. And of course, my profit target is going to go back up here to, like I said, the 1.14, 1.2 area, somewhere around in there. Now I'm looking at a 1.7 reward to risk ratio. That's a lot better of a trade. Still not above a 2 to 1, but still a lot better of a trade, especially we know we've been bouncing between these levels. So for a sideways market, you're not going to get a 3 to 4 or 4 to 1 reward to risk ratio most of the time. Now I can drop down even further if I'm inclined to do more short-term trading, and I can go to the 1-hour chart. And of course, as you can see on this 1-hour chart, if I get a break above this high right here, once again, I could see prices trade all the way back up into this area. Still, my stop loss is going to be pretty big if that indeed does happen. So what I like here about this 1-hour chart is I blow it up and some potential on this 1-hour chart. You can see I've got that same trend line drawn on the chart. We've traded above that. What I'd like to see maybe during this Asian and even the European session is price to come back down, hit that area here where all this resistance was that has now become support, get very close to that trend line, and then buy on that pullback there with a much, much tighter stop loss at that point, probably a stop loss somewhere around this area, which means, of course, now that I am going to see a much larger reward to risk ratio. If I come out here and I look at my reward to risk ratio now, we're looking at about a 3.32 to 1 reward to risk ratio potentially on this trade. If I can get this pullback, We may not get the pullback, may miss the trade altogether. We could just trade the break right here. The stop loss is still going to have to be down below these lows here, down below our moving averages at least, and definitely down below our middle line of our fractal average breakout indicator right there. And in that case, if I just took this breakout trade with my stops down below that low, I could probably get a 2.3 or so, maybe a 2.2 reward to risk ratio out of that if price does break up to the high side here. So that's the euro US dollar. That's what we're looking at there. We've got some short-term strength, I believe, in the euro US dollar for right now. The other trade that I want to look at is the pound New Zealand dollar rather. I want to go out to the daily chart first, and I want you to take a look at this. So on the daily chart, you can see this has been in a massive uptrend all the way from back over here. Now we've had a really significant pullback back down into our 50 EMA, back down also into the lower fractal average breakout line there. And our Williams percentage range has dropped down below, and now it's come back above, and you can see we've got a classic continuation trade. However, I'm not sure how far this is going to go here on this pound New Zealand dollar, how far this buy trade is going to go. There's weakness in the pound right now pretty significantly. But if we got back up to this area here around the 2.4722 area, we could see, about a 1-to-1 reward to risk ratio buying the trade right now, or above the highs of yesterday, which the highs of yesterday, 2.39902. So we're right at that 2.4 level, very critical level there. So a break above that 2.4 level to somewhere around 2.411 or something like that, that would give us a buy signal to go long there. What I like to do once again is drop it down into the lower time frame charts, and then we can see what we're dealing with here. So here we could get a much better reward to risk ratio. Let's say prices break above these highs and we go with a breakout above these highs right here, this high of yesterday. Have a much tighter stop loss on the 4-hour chart, and still potentially get back up into these areas here. So in this particular case, now what we're looking at is about a 1.73 to 1 reward to risk ratio. So going back up into these areas. We drop it back down into the 1-hour chart, and we can probably get even a little bit more out of this. So here we could get a breakout to the upside right there. We could tighten our stop down even more to probably below the fractal average breakout, the low of the fractal average breakout there. And we could still target back up into this high area here, which means that we're going to have some significant reward to risk ratio on this particular trade, right? So let me actually delete this one and get us a good view here. So if I bought right here above the break of this high, the stop loss down below here, and my target up here back up to these highs, now I'm looking at a 2.75 to 1 reward to risk ratio. I like that a lot better. I do think that this is going to gain a little bit of strength here and come back up. Could only come back up into this area here, but we're definitely targeting this top fractal average breakout line. And that's what I think about this particular pair. So give you more of a medium-term view all the way down to an intraday and a short-term view with some swing trading ideas in there. And hope you have a good trading day tomorrow. Talk to you soon.